Hello, ladies and gentlemen. Welcome back to another episode. This is your host, Davey Kim. Hi, Abu. Thank you so much for joining us today.
Thank you for having me.
Yeah, to start off, would you like to tell us a little bit about yourself and your background and journey to founding the LifeCheq?
So I am originally from Ghana in West Africa. I came to South Africa a long time ago when I was young, as a primary school student actually, and have been here ever since. I went to UCT, University of Cape Town, the beautiful city of Cape Town, where I studied actuarial science. And then, as is done in that profession, you'll have if you can't afford the fees, you get a bursary, which I couldn't. So I had a bursary from one of the largest insurance companies in the country. They paid for my studies, and when you're done, you have to do your time, right? So that's how I got into the insurance sector. But I got quite lucky in the timing and when I started in that sector. And it's kind of long story short, my career there progressed very, very quickly. And by the time I was 28, having been there for 6 or 7 years, I was appointed onto the executive committee. So I was a member of top management for what is now a listed company in South Africa at a very young age. And I'd come through the sort of actuarial and product part of the business. So that gave me, quite a lot of insight into the industry, exposure, contacts, relationships, all of that. In South Africa, in a sense, what a lot of people get in the West from going to Ivy League universities, you generally get from which corporate you work for when you start. So I had quite a lucky start in that sense. And then, I was very young and doing very well with my career, but I kind of had this sense that I always wanted to start something. I grew up watching my dad start businesses. Some failed, some succeeded, and always had the sense that I wanted to build something. But I got extremely intrigued by this problem of financial advice. And I'll get into it a little bit more later, but it's such a complicated, messy part of the industry, retail financial services and financial advisory, and how advisors interact with clients and how they interact with product providers. And I became really obsessed with this problem. And I in 2015 left the company I was working at, reconnected with some old colleagues, and decided to start LifeCheq, which is a fintech business that's focused on personal finance and digitizing the financial advice process.
Yeah, I saw your profile that you are CEO for another company, Convex Financial. What is that? What is that about?
Oh no, that's basically it's a holdco structure we set up when we first started LifeCheq. So
got
it's
it.
basically just
same company.
Yeah, same company, basically.
Okay, so I understand the LifeCheq is a platform, internet-based platform and SaaS solution. So what problem are you solving now? And what is your business model? Please explain how your business model works step by step.
So, as I mentioned earlier, our business is an advice platform business. In other words, what we do is we provide a platform for advisors, financial advisors, retail financial advisors that work in banking, insurance, investments, and how they work and deliver financial advice to their clients. The platform brings together both clients and advisors on the platform together with product providers, and allows advisors to basically deliver very high quality, robust, digitized, completely paperless, intelligent financial advice, and allows clients to receive that advice and to interact with it, and also be, in a way, in some senses, drive part of their own journey, and then allows both advisors and clients then interact with the third player on the platform, which is a product provider, so the bank or the insurance company. That's what our technology and our product is. In terms of our business model, how that product is deployed is in two parts of our business. So we have a retail consumer division or a team that focuses on the interaction between financial advisors and clients. And on that side, our business is a platform where clients can go and find financial advisors, and financial advisors can go and find clients, and they can do business on financial advice on that platform. So that's what we call our independent advice platform business. Then on the other way that our business, the other division in our business is our enterprise division, which works with large enterprises to take our technology and effectively embedded in their operations for how they work with their financial advisor and their own products. And there we do very heavy customization. So it's effectively a customized deployment of our platform in their environment that we offer a software service solution to that institution. So those are two divisions. So it's retail, consumer, and it's large enterprise.
Yeah, sounds like your business model for the financial advisor and then retail investor sounds like your platform, something like Amazon.com plus Uber, right?
That's an interesting way to put it. I mean, it's basically it's a supermarket for financial products that brings together the buyers and the sellers.
Yes,
that's right.
Yeah, interesting business. Do you have a competitor in the market for in the similar platform and similar structure?
No, so there isn't a direct competitor that offers a platform that end users as well as financial advisors use, and where they can find each other, right? So most of the closest ones will be just a software service that only that doesn't have a retail brand, that only offers a solution to almost a desktop only solution to the financial advisor to do their admin, and the client never hears about it, doesn't know about the brand, doesn't know about the process, never interacts with technology. And there are not many that also then offer the enterprise solution that we also offer as well. So as far as the business model, I think this idea of an advice platform is quite unique.
Yeah, you have run the business, grow the business already almost 6 years. You don't have a competitor, which means that you are our sole ecosystem owner for this business in Africa. So sounds like you already have a great position in the market.
Look, we have a lot of not direct competitors, but we do have a lot of people that have tried to copy the aspects of the model. I mean, some of the large, I know one large company that did a very embarrassing copy of our process until they realized that they don't really understand how it works. And we have people that have been in the space for a while who offer a piece of the solution. But yeah, I mean, it's still, I think 6 years for me is still early days. It's a big market, and we have ambitions to expand the business beyond South Africa and into the rest of the continent, but also beyond the continent into other emerging markets and possibly the developed world as well. So it's still very early days for us.
How did you grow how much did you grow the business for the last 6 years in terms of number of subscriber or client, or can you share with us some metrics for that?
So we've got about 50,000 retail individuals that have been on the platform and have engaged with advisors, and we've on the advisor side that's growing very rapidly. So we've got initially started with a small handful for quite a while until we perfected the model. So for a long time it was actually only about 15 to 30 advisors, but we now starting to rapidly scale that, and I think the growth. Because it started so much on the consumer side in attracting consumers to the platform, the growth is now very much on the advisor side, and I think you can imagine as that interaction starts to evolve, that can grow quite quickly. And then on the enterprise side, I think I can't go into too much details about. We do have as a client one of the largest financial service providers in the continent, and we're a key part of their business, and I think that's where a lot of our growth also is going to come from in that enterprise space.
Got you. So how do you make money? How do you charge money? Are you charging the commission based on the transaction revenue, or are you charging the subscription fee?
So on the retail side, it's basically a transaction revenue share, right? So there are two pricing models. So the dominant one is transaction revenue share, where when an advisor sells business, we take a cut, right? So in that sense, similar to, if you think of like a point of sale, kind of a device type of thinking, where you only really pay when you transact.
Like Uber, right? You charge it a percentage of the revenue, right?
And those that don't want to do that, we allow them to pay per clients that they have, right? So in other words, also activity driven. So if you're starting out and you've got 0 clients, you can start and it's free. As you gain clients, you pay per client that you are working with on the platform. So that's on the retail side. Then on the enterprise side, it's a license fee plus a per user fee. So on the enterprise side, it works quite a bit like how most software service packages work. So if you think Slack or any of those, you pay per seat basically.
Yes, gotcha. So looking back on the entrepreneur journey for the past 6 years since you established the company, what was the biggest challenge to you? Was it the fundraising or do you have co-founder, by the way?
Yes. So LifeCheq, I started the business. I actually wanted to get to this earlier. So I started the business with 3 other colleagues. So there's 4 of us.
Okay.
All people that I worked with before. We have a history from before LifeCheq, which I think has been critical. Where my CTO Shentian, who I worked with before at Old Mutual, I think so next year we'll be celebrating 15 years of working together in different contexts.
Okay.
Dylan, our chief advice officer, also a similar length of time, and Dave Jacker, he's one of our senior lead engineers now, but he started the business with us. He also has a similar history. So I think all together we work together as a team in some context or other for at least 12 to 13 years. So sometime before LifeCheq as well.
Very good. I can feel that. I mean, you found a good co-founder, and then you managed to have a good relationship and growing the business together. You are lucky, I think. Most of entrepreneurs mentioned that finding and working together with the co-founder, and I mean, beside the fundraising, is one of the biggest challenges to them, right?
Yeah. So look, I mean, I definitely agree. I think founder dynamics are critical, and the trust, because it's a long-term thing, and you have to have deep trust and understanding of each other and each other's strength, and
how to manage that conflict and then work together, develop good faith, maintain the good faith. That's very challenging. Same as marriage, right?
Yeah. Look, and communication, right? So you have to be, I think, especially if there are, more than 2 founders. In our case, there are 4. It's also, there's a lot of like different bilateral relationships and group relationship, and it's quite a bit of it's quite a lot to kind of keep an eye on and stay close to, and really value and spend time on. So that's been key for us. But if you're talking about challenges, I think the other challenge that I think is really important to talk about when you're starting a business in South Africa is the funding problem, right?
Yes.
Because I think one of the things about the South African ecosystem is that there isn't really a very credible yet, a VC industry, right? So look, a lot of the companies that call themselves
lack of supply of the venture capital in Africa, right?
Well, it's even more than just lack of supply. It's actually also the right type of supply, right? So,
yes.
So a lot of the companies that call themselves venture capital.
I understand. Venture capital themselves, they have limited experience, right? So,
exactly.
They don't understand. Maybe it's they'll continue to ask you a chicken and egg question, right? What if you fail to grow your platform? What if you fail to acquire the new client, right? How can you prove that kind of answer, right?
This is the thing, right? So I think that in terms of just risk appetite, but also just I think because a lot of the people that got into the VC space came from an institutional investment space where they kind of expect the sort of things you can ask a big listed company, right? Or the kind of like a risk profile that you'd expect when you're doing that sort of investing. They don't really, think through what is critical, in the very early stages of investing. I think that's the one problem. But the other problem as well is that from their perspective, I guess, is also the size of the addressable market in the ecosystem, right? So remember, South Africa is a smaller economy. People from the outside, I think maybe for your audience, actually, because you've got an international audience, probably important to explain this, in that Africa is 51 countries, and each country has a very different, government, ecosystem, language, culture, regulation.
Same thing about Asia, right? People talk
Yeah.
about Asia, but Asia is
Yeah.
almost 50 countries. They think that Asia is all the same.
No, it's different countries, and although South Africa is one of the biggest, if not the biggest economy, it depends on how the oil price is doing and where Nigeria fits in. But basically, what you have is you can do well in one big market, but it's not enough to build a very highly valuable company, by global standards, and to get the kind of return that's in the valuations, that the VC would want on exit. So they have to look at your model and see something that is internationally scalable. And business models that are internationally scalable are not easy to come by, right? So you can build a very, very nice business in South Africa that is going to be, a good business, local business, but is not going to be extremely highly valuable, and therefore they can't really get the kind of returns that they would otherwise want. So I think the challenge for us really has been to find the kind of investor who will give us credit for the problem that we're solving and the technology we've built and its future potential scalability, in SA and beyond, at a point when they don't yet know how that's going to happen, right? Because they can't necessarily see, how you're going to take this from South Africa to, Rwanda or Kenya.
Yes.
Or Ghana.
Which country market are you covering in terms of operation now?
Right now, it's only South Africa.
Right. Yeah, that might be one big question from the investor. And how are you going to replicate that business model? Your business model itself is very clear, and then well structured, great business model. But how are you going to execute your business model in other part of Africa?
Yeah. So for us, that's why the enterprise side is so important, and that is the most easily internationally exportable and scalable version of the business. And that's, already we have, interest from people in Kenya, in Rwanda, in even in the United Kingdom for an advice platform that works in the way that ours works, that they can customize to serve end customers as well as for the intermediaries to use. And that becomes the easiest. So the enterprise business model becomes the easiest way to enter a new country, right? Because you land with a partner. You don't have to fight from the ground for retail customers one by one, and you can land with a big contract that sets you up. And then you can look at, how else you expand in that market. So for us, I think it's very, very important to have the kind of robust technology. And also I think it's really important to have our business is all about the domain expertise of really understanding, how financial technology, but also, insurance, investments, medical products, retirement products, all of those things work in different markets. I think what's probably important to mention, there when it comes to just talking to investors about the credibility of that is, previously myself and my co-founders all have deep backgrounds in the insurance industry. I worked as a senior executive at an emerging markets business that operated in 22 countries. That business, in fact, it had operations in China, in India, in Latin America, in the UK, all over the continent. So, we know how these markets work, and we can say to investors, look, here's how we would go into this market or that market. It's hard to do that if you only know the technology side.
Yes. I'm not sure whether they have a similar business model in Asia or Europe. If you can build a strong local team in that region, and then leveraging your experience, having grown the business in your country, it could be a very powerful business platform, I guess.
No, absolutely. Look, and I think over the next sort of 2 to 3 years, the really big milestone that we're focusing on is, look, how do we get this business to be operating in 3 to 5 countries, right. And to really start to demonstrate that international scalability, because that's really what's going to drive value, but also really just the vision that we believe in that, good quality financial advice, especially for the middle income customer all over the world, and there's 1 billion such people, is hard to come by, right? A lot of the time it's actually, people blame financial advisors for being very focused on pushing products, but you can't blame them because they're just working in the system that they know how to work in, right? They don't have good tools, they don't have good technology, and our mission is to put that in their hands and in the consumer's hands, and just make the outcome better for everyone.
I have seen a lot of startup in Asia. They quickly grow the business with a new business model, working together, traditional insurance company. They provide solutions, right? So
Exactly.
it is a great business. Yeah.
Absolutely.
What do you have on top of your mind for the next step and your vision with LifeCheq?
So look, I think the big thing that we want to do, that we're working on in South Africa, is really redefining what the word financial advice means in terms of the quality people can expect from the process, right? So typically when you go to a financial advisor, your experience is that you meet them, it's quite a laborious process, they gather a lot of information, but at the end of the day, it's a product, signing for the products that they want to sell you. And from the consumer side, very low engagement, you don't feel very empowered. From the advisor side, very laborious, high pressure. And what we really want to do is to transform that experience to being one where, the customer is coming to a space where they're empowered. They can see where the plan they build with the advisor, can participate in it as an equal partner with the advisor. The advisor feels like a professional that's delivering a high touch, high quality service, and their time is being well spent. They're not doing admin and painful things. And really that experience is a transformative one for both parties. So that's really what we want to demonstrate and scale significantly in South Africa. Then thereafter, it's really growing beyond SA and being present in a few more countries, figuring out where we can make the biggest difference, where we can find the right partners, the right ecosystem to start and expand and just spread this idea that every middle income customer, mass affluent customer everywhere in the world, if depending on how you count it, the 1 to 3 billion people that are out there that are in that market, all deserve and can get good, high quality financial advice. Is not just for wealthy people, right? So if you're wealthy, you can get very good financial advice. You can get an advisor play golf the whole day, and listen to all your problems and solve them. But you can't get that if you're a middle income or mass affluent customer, and we want to change that.
So you are growing the Amazon.com for the personal financial advisor and the retail investor in Africa.
Well, David, I like the sound of that, right? You can think of it that way.
Right. Yeah, you just
we don't intend to have one.
You grow the platform healthy, then always focus on the client customer experience instead of monetizing. Then you have a great future with a great vision with the company, I guess.
Absolutely.
Yeah. So last question is, who is the nicest person you have ever met and why, except for your wife and mother?
So when I was studying at University of Cape Town, there's a lady there who worked there. She's still alive. She's very old now. Her name is Irene Petroni. But even back then, she was an old lady. And she basically, her role was kind of like to help the students who were struggling, financially or otherwise, to help find a solution for all kinds of problems, right? So actuarial science.
Was she hired, employed by the school or volunteer?
Yes, she was hired by the school, but she almost did so many things that were beyond her job description. It wasn't insane. So what she would do, for example, I don't come from a very wealthy family at all. I was there on a bursary. In the one school holiday, I had spent all my money because I'd lots of things to buy, and I'd run out of money in halfway through the year. So I didn't have anything for the rest of the year. And I went to her and she helped me find a VAC job because she knew that I had a bursary with, and she knew people inside, and she connected me to people there. And I got a job over June, July holidays, and I worked and I made some money and I was able to pay for the rest of the year. And then, and look, this was in holidays. I mean, there's not part of what she needs to do, but she was always looking out for students. And then later when I wanted to study, I'd finished the actuarial program. Well, I was finishing it and I wanted to do a master's degree in financial mathematics because I was really fascinated by the intersection between financial mathematics and actuarial science. And I could see a big opportunity there. But my bursary contract didn't allow me to do that. It said, when you finish your 4 years, you have to come and work the very next year. So because she's been in the institution for so long, she knows almost all the actuaries who've been there for the last 40 years. And within the profession, she knows them from when they were students, right? So she's very well connected. She introduced me to the chief actuary at the company that I had the bursary with. And basically, well, she didn't actually introduce me. She just gave me his email address, and she said, "Look, write this man a letter and explain your situation, and see what happens." I wrote a very long letter to this chief actuary. I don't know. I never heard back from him in that year. I don't know what happened, but somehow I got agreement from the HR team that I could take an extra year to do masters. It was like a fairy godmother. She was a kind of character. And I can mention a few other examples where she's introduced me to the right person, or she's introduced someone to me that I could help. She's introduced people that need mentoring that I could help mentor or could place somewhere else. She's just someone who helps connect people in a really beautiful and special way. So I think she would be the nice person outside of family that I know.
Got it. Yeah. So you grow the business successfully and become a billionaire in the near future, so you can return that warm heart you got from her to the many young people, right?
Absolutely.
Okay.
That's what it's about, right? It's about paying it forward.
Okay. Thank you so much for taking time and sharing your very interesting story, ambitious ventures.
David, it's been an absolute pleasure. You have yourself a great Friday, and thanks for having me on your show.
Thank you very much for listening to this episode. Don't forget to subscribe to the podcast, share with a friend, and drop me a review. Goodbye.